Let's put the spotlight then on Shriram Finance. And joining in is Umesh Revankar, the Executive Vice Chairman of the company. Thank you so much for taking time out. To begin with, let's discuss your AUM growth, because in the last 3 quarters, that has been around 20%. Do you think that this year can end with a growth of 20% or maybe higher than your medium-term guidance of 50%, 15%?
Yeah, good morning. The AUM growth has been steady, especially the credit demand coming from urban and rural both, and that is really helping us. And for this year, I think 20% should be the target, even though we have given a long-term 15% CAGR growth for 3 years around the merger. But now in the first year, the credit demand being strong, we were able to grow 20%. Plus, the synergies are working out well. The synergies of merger, cross-selling of product in the branches of erstwhile Shriram Transport and Shriram City Lane, now it's a merged entity. And we're able to really play it well. And it has helped the growth of the volume. Plus, we are able to also improve the margins.
Fair enough. Now, when we're looking at your loan growth, other than CV and equipment finance, it's at about 32% on a year-on-year basis. Your growth in CVs was a bit tepid. Segment-wise, how is your growth going to look at? Are there going to be any pockets where you're seeing growth could potentially moderate?
The CV is something which we had indicated in the beginning itself that we would like to grow between 12 to 15%, because if you look at the last 4-5 years, the new vehicle sales have not been strong, and it has been growing in the last 2 years only. And since we have a portfolio which is mostly used vehicle financing, individual vehicle operators, we did expect that it will grow between 12 to 15. And rest of the other products, especially if you look at the gold loan or two-wheeler loan or even passenger vehicle. See, what makes it different is the passenger vehicle is something which we were able to cross-sell it across all branches, and that's really holding out well. We are growing at 30% in passenger vehicle financing, but as well as gold and two-wheeler and the MSME, we are growing at 30%. So this is balancing out on how we can grow in various markets. In CV, demand also will come on a lag, because as the new vehicle sales, which has improved in the last 2 years, continues, there will be improvement in commercial vehicle financing also.
Historically, the second half is always better for CV sales, and especially the last quarter. So do you see this time that same factor could be at play, which the current quarter will be the best quarter for the year?
Yeah, you are right. Normally, the fourth quarter demand is always high. And also the government spend around this time is always peak. Around the budget and the allocation, all those things helps in the fourth quarter. And I do believe that CV sales will peak in this quarter. But still, if I look back at 2018-19 numbers, the CV sales are just on par or less than that. So I think there's still another 1 or 2 years for new CV sales to grow.
The residual stake of the PAML Group in Shriram Group of companies, when do you see that transaction getting concluded?
It is subject to various approvals. I think we're hopeful of completing it by this financial year.
Financial year, the PAML Group exposure to various Shriram Group of companies, that would actually be zero?
No, they still continue to be in insurance. Through the insurance holding companies, and they will take a call depending upon their strategic goal on what PAML Group would like to do with their investment in insurance business.
If I look at the numbers which we are getting from, let's say, banks, which are also in the same business of CV financing, and I looked at, let's say, IndusInd Bank, there is a slowdown in their vehicle finance business. They are a big player. They are essentially like a canary in a coal mine. So don't you think that the CV business is getting slightly toppy now, where base effect has kicked in?
See, it all depends upon the segment which you are in. Since we are in the segment where individual operators are operating, we do feel with a better network, better penetration into deeper pocket, we will keep growing. I don't really see any lack of demand anyway. The used vehicle resale prices are still holding very good. You are right, because the new vehicle sales look slowed down a little, especially in the LCVs. LCV sales are flat year on year. It has not grown. But the heavy vehicle sales are still growing near to double digit, around 9%.
New norms in terms of the scrapping policy. How do you see the second-hand CV, market moving? I'm just breaking it for our viewers. Let's say if a car or diesel car today has a life of 10 years, which means after the 7th or the 8th year, the terminal value actually will come down. So the same, will that be applied in the CV business also, especially the second-hand CV business?
No, it plays out little differently. See, the scrappage policy is already announced. There is nothing surprise now. The scrappage is going to be voluntary, not compulsory. So if there is a fitness for the vehicle, you can continue to run the vehicle even up to 20 years, whether it is a car or a vehicle. The diesel vehicle restriction has come only in Delhi because they don't want the more than 10 years old vehicle to be registered or transferred or fitness, go for a fitness beyond 10 years in Delhi. But that is not the case across the country. So whatever is the scrappage policy decision or scrappage policy wanted to make a change in the CV or in the commercial vehicle or in the diesel vehicle is already made. So I don't see any further changes into that. So unless there is more incentive for scrappage of policy on voluntary basis, there may not be a significant change in the ownership pattern.
I really appreciate your time. Thank you for joining us. What